And in our top business story, passenger numbers at Dubai International continued to rise in March, with 7.2 million passing through the airport, according to operator Dubai Airport's latest monthly traffic report. Passenger numbers at Dubai, or DXB, grew 7.4% to 7,237,000 in March 2016, up from just over 6.7 million registered during the same month in 2015. This brings Q1 passenger traffic numbers at DXB to just under 20 million, an increase of 6.8%. Passenger aircraft movements totaled 34,318 in March, up 4.5%, and during the first quarter, DXB handled 100,137 flights, up 5.4% from the 94,981 handled during Q1 2015. Eastern Europe was the fastest expanding market in terms of percentage growth, followed by the Indian subcontinent, Western Europe, and the GCC. India remained the top destination country in March, followed by Saudi Arabia and the UK, with London topping the list of destination cities, followed by Doha, Jeddah, and Mumbai. In addition, the airport's operator revealed that it handles 217,201 tons of freight in March 2016, up 0.1% from the 216,879 tons recorded in the same period last year. During the first quarter, freight volumes grew 3.4%. Abu Dhabi-listed Etisalat has reported an 8% fall in first quarter net profit. Etisalat, which directly and indirectly operates in about 17 countries across the Middle East, Africa, and Asia, made a net profit of 2.00 billion dirhams in the 3 months to March 31st, which compares with a profit of 2.18 billion dirhams a year earlier. In a statement, Etisalat said that its lower profit was due to factors which include higher depreciation expenses and foreign exchange losses in the quarter against currency gains in the corresponding period of 2015. The profit fall came despite Etisalat generating first quarter revenue of 12.85 billion dirhams, 1% up from 12.73 billion dirhams a year earlier. Etisalat had 165 million subscribers as of March 31st, down 1% from the same point a year earlier. It cited disconnections, which were a result of mandatory registration schemes in various markets. CEOs and senior officials from the hospitality sector have today attended the 12th edition of the Arabian Hotel Investment Conference in Dubai, discussing ways and means to adapt to a new era of political and economic challenges. Organizers attending the AHIC conference stated that at a time of disruptive change in the global economy, skills to adapt to a new reality are key to survival, and governments in the region should recognize new approaches of doing business and prepare for a better future. Giving an update on the economic and geopolitical challenges shaping the region, officials at the Abu Dhabi Investment Authority stated that although lower oil prices were supposed to be good for the global economy, hasn't really happened, and this is partly due to a major structural change in the global economy, as many oil importing nations such as the US and Canada became oil-producing countries. Adding that oil intensity has witnessed a long-term decline since 1979, experts revealed that although lower oil prices fuel consumer spending, GCC countries relying on oil revenues will have to look at other means to fuel growth, and the UAE has proven to be a shining light in the region.
When you like me, when you see in many oil-producing countries, then you have to say that the UAE is probably one of the most successful in dealing with this very difficult situation where you depend on revenues from one commodity. And they have shown this right now again, by being nimble and flexible in reacting to looking for opportunities to cut excessive expenditures, and in discussing, how to reshape the economy in the wake of low oil prices. There's this old saying, never waste the opportunities a good crisis gives you, and I think here this is taken to heart, and it's of course made easier by the fact that in previous times they have not spent all their money.
During a panel discussion on how the drop in oil prices are affecting the hospitality sector, officials representing the Saudi-based Dur Hospitality stressed that instead of remaining inactive, business should try to take advantage of the lower oil price environment. Company officials revealed that they are currently investing 1.5 billion Saudi riyals to achieve a planned portfolio of 20 hotels and 6 residential properties by 2023, and are confident that the new vision of the Saudi Arabian government recently announced will help in driving economic growth not only in the country but in the region as well.
Saudi Arabia has a potential to increase the number of travelers multiple times from 2 sectors. One sector is the religious sector, where we heard plans by the government only yesterday that they want to increase the number of travelers from 8 million last year to 30 million by 2030. That's one angle. But there's also the tourism sector and the business travelers who are eager to come to Saudi Arabia once the visa regulation eases up and becomes more streamlined. So if the Saudi government takes advantage of these 2 opportunities, this will easily fulfill the demand or increase the demand to fulfill the supply that is coming up soon in Mecca, Riyadh and Jeddah. But also not only in Saudi, I would think measures of that sort in neighboring countries could also be of benefit.
The Arabian travel market has continued to see a steady increase in visitor traffic to the event, with a 4% increase in the number of visitors through the doors over days 1 and 2 of the show. Some of the pavilions that have garnered particular interest have been those from the big Gulf carriers, including Emirates and Etihad, whose stands included impressive displays of their luxury and first-class offerings. In addition to this, other European and Asian carriers also had a strong presence at the show. Swiss International Airlines, along with their global strategic partners, Switzerland Tourism, brought a host of local Swiss tourism operators to this year's ATM. The airline has witnessed a year-on-year increase of passengers from the Middle East of 3.7% for the month of March, and while they acknowledged the dominant position of the local Gulf carriers in the market, airline officials stated that they believe that the niche service that they offer to passengers will continue to attract more tourism and business customers from the GCC.
Well, here obviously we are in the home market of the dominating national carriers, namely Emirates and Etihad. So we are playing in a different league. We cannot compare ourselves with being not operating also in the home market. So we are kind of a niche or a boutique carrier. So we are having other strengths than the giants here in the region, which is we approach our customers in a much more individual way, much more personalized service. And yeah, that's the way we try to be here in the market. And not to forget, Switzerland and the UAE in particular, they share excellent relationships, not only on the governmental basis, but also on the business community is sharing very strong ties together. There are a lot of opportunities, in particular also for Swiss companies here to produce, to make business. Business entry is relatively easy. Production costs are much lower than in Switzerland, as with the high Swiss franc in particular as well. So there are a lot of opportunities also for corporate, for business travel, which connects Switzerland and the UAE.
Also returning for this year's show was Sri Lankan Airlines. As a long-term player in the Middle Eastern market, Sri Lankan Airlines has seen continued growth in its GCC operations, where they currently have daily scheduled flights between Dubai and Abu Dhabi. In addition to flying daily to most of the major cities in the region, officials from the carrier revealed that they will also be adding additional flights to Riyadh to provide daily services while also adding a daily flight to Jeddah. The additional capacity, according to the airline, will continue to facilitate the strong demand from the Sri Lankan workers in the Gulf, as well as its reputation as a value-for-money regional tourist destination.
Sri Lankan Airlines, as you know, had been in this region for a long time. And over the years, we have expanded our operations. And we are currently thinking about increasing the number of frequencies that we fly into the existing network here. And secondly, we're looking at new destinations in the region. The likes of Iran, Jordan, Lebanon, and some points in Africa as well. We're currently working on the refleeting of fleet. The new aircrafts are coming in. As and when the aircraft time is available, we will be expanding our operations into the Middle East. Middle East remains a very important market to us, both in terms of the tourism potential. As you know, the number of tourists coming from the Gulf countries into Sri Lanka has increased over the years. We have seen constant growth in that segment. Plus, there are a lot of Sri Lankan expatriates working in the Gulf. So in terms of that, Gulf is a very important market to us.